This is the ICO Alert Podcast, Episode 1. I'm your host, Robert Finch, founder of ICO Alert. ICO Alert is the trusted source for analysis of ICOs, otherwise known as initial coin offerings. We maintain a comprehensive list of ICOs on our website at icoalert.com. If you're new to the ICO space, or even the blockchain space, don't worry, we've got you covered. Head to start.icoalert.com, where we have helpful introductions to this exciting new world, introductions about ICOs, and introductions about the blockchain space in general. That's start, start.icoalert.com. My guest today is Eyal Hertzog, the co-founder and product architect of Bancor. During the podcast, we'll talk about what Bancor is, how it plans to disrupt a massive part of the existing blockchain space, plus we'll touch on their stance on regulation and how it may affect their users in the future. Without further ado, let's get to it. Joining me today is Eyal Hertzog. You may know him as the founder of Bitkha, a popular video sharing website, and now he has dove headfirst into the cryptocurrency space with a project you may have also heard of known as Bancor. Eyal, thanks so much for joining me today.
Oh, thank you for having me.
Absolutely. So I think to get started, it would be good if you could give a little bit of your background, what you did before Bancor, and then if you give me sort of an overview of how you got into this space.
Sure. So I started programming when I was 7, actually. So this is where it all started. I've been in the Israeli military service, a standard thing here in Israel that you have to do for 3 years. I did actually for 4 years because I was already kind of put into work with my skills with computers, and that was a fun period. After that, I joined a startup. Then I started my own company back in '98. It was Contact Networks, contact.com, which was a social network. It was an application that you download to your desktop. That was before web app. So a social network application. Then the .com crash happened. And then I started Bitkha like a couple of years later, 2003, with the whole kind of vision of enabling people to share videos and watch videos that others shared. And that was working really nice. It was growing very fast. We got to like 50 million users per month, like top 100 websites on the internet. But we did have like a big miss. And the big miss was that we were very, very focused on the best videos, the most viral videos, the greatest hits. And we did have the like top one, like the top homepage for videos online. But what we missed is something called the long tail. So apparently, when you open up a new, I would say, format, a new platform like Bitkha or YouTube, where everyone can upload the video, something very interesting happens, which has been named the long tail, where there are a lot of niches. There are many different categories of videos. For example, videos about blockchain. We probably spend a lot of time watching those videos, but most people don't. And that's our niche, and everyone has, his own thing, whether it's like, if you like to watch your favorite guitar playing, doing like crazy stuff, or your soccer team, or whatever it is. And when you combine all those niches together, you actually get to the conclusion that this is 99.9% of the traffic, which is quite amazing. And that is the long tail. So the hits are actually pretty small market share if you think about it. It's more like /r/videos in Reddit.
Right.
So that's a very small kind of usage compared to kind of what people are doing on YouTube.
Right, that makes sense.
So
Okay. Yeah. How did you get into the crypto space after
yeah,
MetaCafe?
so after Medicafe, I left in 2010, and I started to become a user of those platforms, watching a lot of long tail videos. Um, and on one of them was actually a podcast that told the story of Bitcoin in 2011. And I heard that, and my mind was literally blown, and I couldn't step away from my computer for like a month, just researching this crazy thing and doing whatever I can to buy Bitcoin. Telling, by the way, all the people I know that they should buy Bitcoin, like all my mailing list. They thought it
Wow.
was spam or something.
Yeah. Did they
And
think you were just totally insane?
yeah, and they were sure that I was insane because as I told them to buy it, it was $8, and it was going up and up to, all the way to $30, and then it crashed to $2.
Wow. Oh, so
It's
they were
crazy.
like, oh, forget this guy. I'm not going to listen to anything he has to say.
Exactly.
That's great.
And that was even before they came out with the term hodl.
Right, exactly.
So I saw that, and I thought to myself, oh my God, this is a user-generated currency. There's gonna be so many more user-generated currencies. This is a new era. Something's gonna change. Something. I couldn't stop myself from being so excited about it. But Bitcoin was one currency. It wasn't like a platform for currencies. It was just one currency. And I was like, okay, so how do we kind of move forward this user-generated currency? Since there was no blockchain solution, we created our own central server, like cloud-based system. We set up a company, we raised some funds, we built a system that allow communities to create currencies. Community currencies, by the way, is a big deal. I mean, that's something I started to kind of learn when I got into all that space.
Yeah,
That
could
there
you
are
explain briefly, just for those that are listening that don't know, what a community currency is?
Yeah, so community currencies, and there are thousands and thousands around the world. I heard that even Bali alone has like 2,000 community currencies. And they're currencies that issued by the local community, and they are used by the local community members to buy and sell from between each other and between businesses. And it's almost like they take they do like a pinpoint quantitative easing, if you will, in that places, because when you think about what is money is a tool for mass collaboration. That's what it is.
Right.
It's a technology for mass collaboration that we came up with so long ago. We kind of forgot it's a technology. Like we don't think about writing as a technology, but it is a technology. And money is also a technology that changed its format, throughout the time, many times. And just like countries can issue their currencies, just like we can use rare metals as currencies, and local communities can issue their own currencies and use that in order to collaborate with each other. This collaboration tools enable people to specialize. I can specialize in growing tomato, and you're in potatoes, and through money we'll be able to collaborate and enjoy each other's produce. So there are many examples, and I'm really kind of encouraging people to learn about it. But there's still something that keeping it back, and this is something that we took some time to learn, because we launched the first kind of digital community currency back in 2013. It was like a local mom group in Israel. It was the Facebook group of young moms, and it became an overnight hit. I mean, 10,000 members were joining like in no time, and we issued the currency to every new member, and whenever you kind of posted something you want to sell in the marketplace or invited a friend, you will be issued some more currency. So
So how were you keeping track of the currency? I assume it was not blockchain based at that time. Was it
yeah,
just sort of
right.
an internal ledger that you
Yes,
were?
yes,
Okay,
yes.
interesting.
It was like banks do it.
Right. Yeah.
only on Google Cloud.
Right.
So we we wanted, we're end user experience people. We're not like hardcore technologies that build blockchain. I mean, MetaCafe was an end user experience. My other dear co-founders, they coming from the game industry, so they did like social games on Facebook, the most popular bingo game on Facebook, stuff like that. So we're all kind of user oriented. I like to call it where technology meets culture, that particular space. So we wanted to kind of see if people would use a user-generated currency and experiment with that. So we really built that up, and tens of thousands of members were using, and we quickly got to 1,000 transactions per day, which is insane. We couldn't believe our own eyes, and more communities wanted to use the tool, and we opened up to more communities, and then we started to see that there is a pain coming from the user that said, I'm a member of this community, but I want to use my coins in this other community. How can I do that? Now, usually you would set up an exchange, but those are small communities. They are not traders. They don't know bid and ask. They don't care about this.
Right.
They just want to use their community currency somewhere else. And then the question is, so what is the conversion rate? That was a big deal. And this is where we kind of started to experiment with the idea of currencies holding reserves of other currencies, making all those pilots. And we actually connected some of those currencies to see how it works.
Wow.
And we saw a lot of cross community transactions. So they started to work. But as time went by, we noticed that there is even a bigger problem. And the bigger problem is that even though those currencies could be liquid to each other, they cannot be liquid to the greater economy. And not being liquid to the greater economy is like having a TCP/IP network not connected to the internet.
Right.
It is useful. You can do a lot of stuff with a TCP/IP network, right? You can move stuff between the computer, but there's no comparison to the power when you actually can connect it to the internet, right?
Absolutely. So it seems like this sort of you could call it like the behind the scenes goal of Bancor, or what you guys originally were trying to accomplish. It seems to me that you've actually been working on this a while, and I know with the current state of the ICO space, I think many people just kind of assume, oh, here's a new ICO, here's Bancor. They probably just came up with this idea last week, and now they're trying to raise $20 million or whatever it may be. But it's always interesting to hear how far back that goes. So, I mean, that's a great story, starting with the community currencies, and it seems like Bancor and the blockchain is going to solve a lot of those issues.
Yeah, thank you. So yeah, of course, we are in that for a long time, and we're actually pretty known in the local Bitcoin community in Israel, Bitcoin crypto blockchain, but we only came kind of out to the world with when we had something interesting to say, and that was last February. So just to continue the story.
Yeah, please.
We noticed that there's a bigger problem, that it was isolated from the greater economy. And since it was a centralized system, there were like a regulatory issue with that. It's not like we can start kind of moving dollars and stuff in the same way that we were working with community currencies. And then Ethereum came along. And when Ethereum came along, we didn't get it at first. First of all, we met Vitalik here in Israel before he started to work on Ethereum, and
oh, wow.
we were actually backing Mastercoin. Mastercoin that is Omni today, Omni.
Oh,
so they
okay, yeah.
So they were like sitting in our offices when it all started, because we wanted to have a blockchain platform that can issue currencies. We wanted that. The world didn't have one, and we wanted someone to build it. So we met Vitalik and in some meetup, and he told us that he's planning to do that. I thought to myself, oh, that kid is like dreaming. That sounds too hard. But apparently he's a very smart kid, and he made it. And actually, partnering with some of my friends as well. And when it got out, Ethereum, we didn't kind of completely got the power of it, but it felt that there's something there, and the ability to create tokens really kind of appealed to us. So to look further into that, because you would go to the homepage of Ethereum, you would see create a token. So it seems like very relevant. And as we were like exploring and researching that, and I've been an entrepreneur for 20 years, and still it took me a while to kind of figure out how powerful this platform is and how it's incomparable to Bitcoin or all the other, smart contracts are kind of the future of crypto. If we started with just having currencies, like primitive societies had gold and they were trading in markets, but modern societies had more than just gold. They had legal system and securities and this whole structure that enabled advanced economies that can do that can deal with capitalizing early stage ventures and complicated stuff like that. You need a whole legal structure and legal system and trust system in order to do those kind of things, and that just not to be found on Bitcoin and very native to Ethereum. So it kind of took a while to get how powerful this platform is. And while we were in that process, we were starting to think about the Bancor protocol. So first of all, we knew about the Bancor offer by Keynes from 1953 on the Bretton Woods, because the famous economy Keynes, he wanted to kind of arrange the world economy according to the principle of Bancor. You can read about it in
Interesting.
Wikipedia.
So this is kind of named after that.
Yeah, it's named after that. It's not like we love banks or something. But that was, he suggested a supranational reserve currency that would be held by every country in their reserve, and the reserve will be balanced in order to kind of keep import and export of every currency, every country balanced, and it was very sensible and very smart offer. Even recently, the governor of the Central Bank of China mentioned that we should have listened to him, because instead of listening to him, what was decided in this conference, and don't ask me why, but it was decided to use the dollar as the world reserve currency and not to create kind of a neutral supranational currency. And the reason for that was because the dollar was backed by gold. So just like using gold, which it was until 71. So, and before most of us were even born. So we're kind of living in the post gold backed currency world. And it does look a little bit like a mess.
Yeah, and it's amazing to me, not to go into too much of a tangent, but it's amazing how many people still think that fiat currencies, particularly the US dollar, are still backed by gold even to this day. Like there's a huge group of people that still believe that when it's just totally not the case.
Right, and some people say stuff like it's backed by the central bank, and they're like, how? What?
Yeah, exactly.
What is it backed with? Or it's backed by one thing. It's backed by the fact that you'll go to jail if you're not going to pay your taxes with that currency.
Yeah, that's true.
That's what backing those currencies.
That's very true.
And it's a pretty good backing, I have to tell you. I mean, it's a good.
Yeah, motivation. I mean, it works.
Yeah. So we started when we saw Ethereum, and I'm talking about kind of late 2016 now. And we started to explore and develop, and it was just after the DAO kind of passed, and all those attacks on Ethereum, they started to kind of be able to deal with that, and as we were working on that, we figured out that we can create the Bancor protocol, which can be completely decentralized and automatic, and essentially solve the liquidity problem by connecting networks to each other. Now, connecting currencies to each other. Now, the movie, the book by Bill Gates, The Road Ahead. I mean, that was big joke about this about this book, because he was talking about, so many things that will happen, but the internet wasn't one of them. It was like talking about the future, but and there were networks at that time. It wasn't like
Yeah.
there were no networks, but still, the idea of connecting all the networks together to one big network was not even intuitive enough for Bill Gates. And
Wow.
he was a genius.
Yeah, even for somebody who then went on to be an instrumental player in the space. That's fascinating.
Yeah? Now, we have many value transfer networks that we call currency. What is a currency, if not, especially digital currency? It's a network where I can transfer to you value if we're on the same network. If you're using Bitcoin, I'm using Bitcoin, I can transfer value to you, you can transfer value to me. It works. But if we're not in the same network, so those networks are essentially disconnected. And the only way to connect between them is using human labor, if you will, in exchanges of people that are like bid and ask and matching buyers and sellers in order to enable value to transfer from one network to another. This is the reality that we live in. It's almost like saying, oh, we have internet because we have all those TCP/IP networks, and we have those guys whose their job is to run with USB drive between them. And that's the current reality between currencies. I mean, currencies, they don't know each other. They don't understand each other. They're not aware of each other the way that TCP networks are, which is why you can access from your network every other computer and every other network in the world. And Bancor protocol is essentially coming to solve that by enabling me to use money. It's essentially a way for any cryptocurrency, let's say smart contract-based currency, because it needs to be a programmable currency in order to use the Bancor, in order to be what we call a smart token, which is a token that uses the Bancor protocol. And a smart token is a token that holds one or more other tokens in its reserve. And it kind of managed this reserve in a way that it set a price for and sells itself in exchange for the reserve currency, or vice versa, it would buy its own units and pay out in the reserve currency in exchange for that. So you buy the token, the smart token, from the smart token itself, from its smart contract, and you sell the token to the smart token itself through the smart contract. Now, whenever you buy, the price goes up. Whenever you sell, the price goes down. And there is a very simple way that the price is calculated. We call it a CRR, constant reserve ratio. So, if you define a reserve, you can, for example, create a smart token that has a reserve in Ether, and you can define that the reserve is 10%, meaning that 10% of the market cap, which is the total supply multiplied by the price, is what you have in your reserve. And this is how the price is calculated. And naturally, when you calculate the price this way, when you're buying the token, you're actually sending the reserve token to the smart token, and the price will go up naturally because the reserve just filled up. So it will recalculate the price, and the price will be higher.
Interesting. So theoretically, let's say I go ahead and I create a token. I create the ICO Alert token or whatever it may be, and I set the reserve currency to 10% of the total market cap in Ether. What would happen then? Because as people are cashing this out, presumably they're getting that Ether from the reserve, correct?
Yeah.
So what would happen if the reserve went dry? Like if more than 10% of people cashed out their tokens?
Oh, so that's a very good question. So the first thing to kind of realize, and it's what happens if 10% of Bitcoin holders want to cash out their Bitcoin to dollars? Price will go to zero. It will probably go to zero somewhere around 3% or 2%, because if you look at the order books on exchanges, which is something that you can compare to this reserve. Those order books that exist on exchanges is what provide the kind of it's the current liquidity of the currency. I mean, if you want to cash out Bitcoin to dollars, the way for you to do that is using those order books that are in exchanges right now, and kind of cashing out your currency. If you want to do that immediately, so every currency, if like 10% of the currency will go out to the market, would completely crush the price. Now this will happen much less drastically with a smart token, with a Bancor protocol, because the way that it works is that when the first one cashes out, then the price of the token goes down. The second one will get less of the reserve because the price went down, and will take the price further down. And each one will kind of take the price further and further and further down. So the idea is that the reserve will always remain. After each transaction, the reserve will stay exactly 10% of the market cap, because this is how the market cap is calculated. This is how the price is calculated.
Interesting. Okay.
So after each transaction, the price will be affected. So you'll always have 10% of your market cap in the reserve.
So it's kind of like diminishing returns as people withdraw, essentially.
Exactly, which is exactly the same behavior that you'll experience in exchange if you want to dump a lot of supply on the market, but not as drastic, because here you actually have one single liquidity pool which is a substantial percentage of the market cap. I mean, if you look to on popular cryptocurrencies, and you kind of try to measure how big is their liquidity pool, how big is their market depth, if you will, you'll see that it's usually less than 1%, 2% at the most. So here you have something which is more stable and predictable, and it does not rely on market makers and speculators and day traders. I mean, they're welcome to use the system, but their participation is optional rather than required.
Right, that makes sense. That's really interesting. I mean, it seems to me that the system in place is definitely an improvement over the existing exchange method, especially when you're talking about taking like one community currency and converting it into another. One question I did had, do you see Bancor sort of expanding beyond these community currencies? It seems like that's sort of the core problem that you're trying to solve, is like the liquidity and I guess interoperability of all these community currencies. But do you see it doing more than that? Because presumably, like if I create a new token and I say one token equals one ether, then that's kind of like a futures contract for ether in a way, is it not?
So first of all, we see it to do so much more than that. The community currencies was, I would say, the spark that light the fire, and kind of led us to think about creative solution of how can you enable liquidity and price discovery without using an exchange. However, when we figured that out, we got to the conclusion that this has much more application for any kind of currency, because, for example, you can use not one reserve, but you can use two reserves. I mean, a smart token can have two reserves. So I can create a smart token, and I can define that one reserve is Augur and the other reserve is Gnosis. And let's say I can even give 50% CRR, like the reserve ratio, for each one of them. 50%. So my smart token would actually behave like a basket, because it will hold 50% of its market cap will be Augur, 50% of the market cap will be
so
Gnosis.
100% of the market cap would then be sort of backed by these reserves?
Yes.
Interesting.
And that creates like a decentralized token basket.
Yeah, that reminds me a lot of, I'm sure you saw that Shapeshift launched Prism, which essentially is something similar that allows users to kind of create their own baskets, and you can kind of jump into other baskets. Do you all see this as a competitor to that, or is this kind of just an added feature to Bancor?
So it is. We do see it as an added. I mean, we are about to allow people to do the same with Bancor. The only difference is that with Bancor it happens in a completely decentralized way because it's using a protocol. It's not a service that we collateralize in the background and we give all those services and take those fees. This is something that anyone can take right now, the smart contract code from our website, and do it right now. Now, I wouldn't advise it because we still want to test it and field test it like very very well. But it works, and the reason that the difference is that because, or should I say, the thing that make it decentralized is that the prices are calculated automatically by the smart contract. So if I create a token like that, we actually call it a token changer, because you can use that not just to hold Augur and Golem, but you can use that in order to change Augur to Golem, or Gnosis, I'm sorry, Augur to Gnosis and Gnosis to Augur. Because when a smart token has two reserves, it means that it has a price in each of the reserve. And you can buy the smart token for each of the reserve, and you can sell it or liquidate it for any of the reserves. So the smart token becomes a hub that connects those two currencies, those two different tokens, and can be used in order to convert between them. Now, whenever you do that, you change the price, as I explained before. The price is changing following every transaction. So as people kind of use this token changer to kind of convert between Augur and Gnosis token, if the price will go far away from, let's say, the market prices, we'll see what we see every day, which is called arbitrage. There are arbitrage bots that actually make sure that the prices in different exchanges are the same, because if they're not the same, it's an opportunity to make riskless money. So, there are a lot of agents, or usually it's, kind of bots that are financially incentivized to be operational and balance the prices between different exchanges. And in that regards, the smart token behaves just like another exchange, because like in every other exchange, when you buy something, the price goes up. When you sell it, the price will go down. It's called slippage.
Right.
With smart tokens, it's just very predictable slippage that you can count on. But with exchanges, it's more like crowd based, but it's the same mechanics. It's the same concept. So if the prices kind of differ from what's happening in the market, obviously arbitrage bots would fix that immediately. So you'll have this smart contract that enable anyone to kind of switch from kind of convert token A to token B in a shape shift like experience. And the liquidity would be provided by those arbitrage bots that are financially incentivized to do so. And the good thing about arbitrage is that it's a race to the bottom. So whichever arbitrage solution is willing to take the lowest fee, it would kind of get the deal. Because if it's willing to kind of take the lowest price difference and kind of act on that and balance that. And the interesting thing here is that, if you have this token changer, you can actually charge a small fee for every conversion that would be kept in the reserve. So if you do that, any holder of the smart token, which is the token changer, would actually see a smart token increasing in value, because every time someone converts between the reserve currencies and paying a fee, it actually increases the assets that the smart token holds. So you can essentially create a liquidity pool that everyone can participate in, and generate revenue from all the exchanges that people are doing using the liquidity they provided to that smart token.
So do you see this?
Very interesting models. Yeah.
Yeah. Do you see this as something that will completely replace exchanges in the future? Like if you had a smart token for every single currency pair, or do you see this as something that's just kind of added liquidity to a market?
Yeah, I do think that it will eventually replace exchanges
Wow.
because it's almost like to ask for me, will money replace barter? you know,
Yeah. So you see it
uh,
as that much of a logical next
you know
step.
it's not just it's not just detached from reality. There is something called in economics the double coincidence of wants problem. It was coined like in I think 1875 or so by Jevon, uh, one of the early thinkers. And the double coincidence of force problem, it sounds fancy, but actually very simple. It is what money solves for barter. Because with barter, you need a double coincidence of wants in order to have a transaction. You need to meet two people that have opposite wants, and only when they are kind of they're meeting each other, which is rare, relatively speaking, you can have a deal. And this is why barter is so hard and using currency is so easy, because the currency can separate buying from selling. You don't need to do both in the same action, in the same transaction. And money is a technology that solves the double coincidence of wants for trade. In the same way that writing solves the double coincidence of wants for human communication. Because if we didn't have writing, let's say the age before writing, we had to be in the same place, and I would want to talk and you would want to listen, and we'll have a double coincidence of wants, and we'll be able to pass information. But thanks to writing, I can talk to the paper and you can read from the paper, and we kind of separate those two activities of writing and reading, and that created modern civilization, right? I mean,
Yeah.
it was a very important advancement. And the funny thing is that with asset exchange, we still suffer from the double coincidence of one problem. We still have it, because every time you want to exchange one currency to another, you need to be matched with someone with opposite wants. So we have the double coincidence of one problem. And Bancor protocol is a solution, is a technological solution to the double coincidence of one problem in asset exchange, because when you use Bancor protocol, you don't need to be matched with a second party. But in order to do that, you need to have money that uses money, which for the first time in history, we could do with smart contracts.
Wow. Yeah, that's fascinating. I mean, it'll be interesting to see kind of this shift. I know there are a lot of decentralized exchanges coming out that are not doing this through smart tokens, but just kind of doing it in a more peer-to-peer exchange way. But I think that still requires the double coincidence of wants, where you still need a user to log on and say, hey, here's my bid, and another one to say, hey, here's my ask. So it's definitely interesting how this is solving it in a totally different way.
Right. And it's sometimes it's very challenging, especially for people that kind of deep into this space of trading and markets and technical analysis and all those things. It's not very intuitive. Have you ever tried to explain Bitcoin to someone from the financial sector?
Yeah.
It's much easier to explain it to a developer, right?
Absolutely.
But if you get used to do things in a specific way, then the mind rebels against those kind of new ways of doing the same thing. So it's
What do you
not
mean
always
there's no central issuer?
exactly. It's not backed by anything. Uh, so so it is a very different approach, and of course, I think that there's so much room for decentralized exchange in the foreseeable future, because no revolution happens overnight, and it's going to take some time to kind of adapt to system like that and to learn how to use them. And God knows when we'll have I would say a smart contract enabled blockchain that can even hold and not hold, but support all the traffic that today exchanges are running. I mean, because today chain exchanges are handling so many requests. So it is starting, and will take on the big challenges, I mean, not the big challenges, but we take on the big and most popular cryptocurrencies in the beginning. And another important asset is asset tokenization. I mean, the whole asset tokenization phenomena is very critical to Bancor protocol, because it means that you can use gold or dollars or euro in smart contract as your reserves. It's important to understand that Bancor protocol is backward compatible. It's not like I'm saying, hey, forget all the currency we have in the world. Let's start from fresh. Let's start setting up new type of currency. We call it smart token. That's not what we're saying. We're saying there is this thing called smart token, and it's backward compatible with every existing asset.
So how would that work? Let's say I wanted to set up a currency that was half backed by the US dollar and half backed by gold. How would I go about sort of proving those reserves? Because of course it's not a token where I can just send it to a smart contract.
So that's exactly it. For example, gold, you can use Digix gold.
Oh,
and that
okay,
is
interesting.
Token that you can send to a smart contract.
And then I guess with the US dollar, you'd use something like Tether?
Yes, exactly.
Oh, okay, interesting. All right, exactly. That makes a lot of sense.
So now you can use the system not just for crypto assets, but for everything.
Yeah, that makes a lot of sense. I think now would be a good time to shift gears and kind of jump back to how the actual platform works. When I was looking through your website, I saw these screenshots of somebody sort of messaging with this chatbot saying, hey, I'd like to start an ICO, and they put in the details and the cap and the price per token and the amount of tokens and things like that. And within 60 seconds, it seems they can just kind of make their own ICO. Exactly. And one of the things I wanted to ask you, I mean, do you see this as a platform for ICOs? Because with the current state of the ICO market, more and more ICOs are being released every day, and with more and more criticism. So to enable someone to create an ICO in less than 60 seconds, I mean, do you think that that's kind of exacerbating this problem, or do you think it's maybe solving a problem with the ICO market in some way?
So first of all, I look at it much more like Kickstarter, which is a $30 billion industry of crowdfunding. And I think it would work much better with crypto tokens. I mean, if I want to support any cause, I rather get tokens and decide later what I want to do with them, rather than kind of committing to specific thing. And if you are building a Kickstarter which is based on tokens, so even if it's a small thing, it's a local business, if it becomes successful, you can actually have an upside in it. So. But it's really not about ICO or Kickstarter or any of those things. It's really about looking at currency as an application, as a network, and making sure that everyone in the world can use that tool that has been made available to any of us. We look at it almost like my previous company, MetaCafe. It wasn't possible for people to broadcast video online to the world. It just wasn't possible. So you had TV, and only what people chose to show you on TV, that would be the video that we would watch as kids. I'm sure you remember. I mean, I don't know how old you are, but I'm like 43.
No, I grew up with the Saturday morning cartoons, absolutely.
Yeah, so I think I didn't even have that. We had like one channel in Israel.
Wow.
During my entire childhood, that was quite depressing. I had to play a lot of soccer. Anyway, so you don't have a way to do that, and then all of a sudden you kind of tell the world, hey, video, you can shoot yourself, you can broadcast it to the world, you can do cool stuff, and you get YouTube. So it's really about enabling the tool, which is in this case not about video broadcasting, but the tool that's called currency. And currency, if you think about every currency, is a community. You have a community admin, and you have the community members, which are the holders. So our tools is much more like a community tool that has a currency.
So it's more about kind of enabling that soccer mom Facebook group, for example, to make their own currency on Bancor without any technical experience.
Exactly. So you can create a currency, and we make it very simple. Again, we are about building simple user experiences. And we look at the state of things in blockchain, and it's actually not that good, to be honest. It seems like there's still a long way to go in order to make things more simple to use. So, for example, the whole liquidity thing, the most important reason for us to do it is because it simplifies. You don't need to go and figure out how to exchange from one currency to each other. I have this currency and I want to pay you in that currency, and I just do that. And something in the background is doing all the conversion and the calculation. I don't care. But from the end user point of view, it's a very simple process. Or if I create a currency and I don't need to negotiate with exchange to list me, it is just liquid from the beginning because I have deposited some kind of a reserve. And the crowdfunding is more like a way to help you kind of raise maybe some funds for a project. Like, again, it could be a local currency or a Kickstarter. You can take from those funds and deposit in the reserve. So you have a reserve, so you have the liquidity. So it's kind of a service that you have around this idea of currency. And people can accept this currency, send this currency, request this currency. They have a wallet, they have a transaction history, everything that has to do with that. Now, additionally, the whole security thing in blockchain is a disaster. It's a complete disaster. I mean, you wanna set up a wallet. So either you have to choose not holding your tokens and counting on someone like Coinbase to kind of handle all the security for you, which is expensive for Coinbase and not great from the user because hacks has been known to happen, or inside jobs or risks like that. But we or you have a horrible user experience that you need to kind of write all those words and copy the files and keep them safe. I mean, no users in the world can do that. Users can only deal with forgot my password, and even that my mom called me in order to do it for her.
Right.
So we kind of find a way to do that very, very simple, to handle the whole security issue very simply using smart contracts, using the concept of guardians. So I can choose guardians like my geek friend or some other guy that was using the system before me. And if I forget my password, they can save my ass and kind of recover my funds even though I forget.
So to clarify, that's the concept of the guardian is not something on like a currency or a token-wide basis. It's just on a user-to-user basis, correct? So there's no guardian for the currency. There's just a guardian for the individual user that chooses to have it.
Exactly. Okay. It's like my guardians. And by the way, they don't have access to my accounts, but they can initiate like account recovery process in case, I lost my password, so I can ask them to initiate it. But if I didn't lose my password and they initiated, obviously I can stop it. So it's not like you're giving them access to your account.
Oh, okay. Yeah.
And you can have multiple guardians. So if one of them betray you, the other one will save you. So all those kind of things that you can do with smart contracts or integrated vault. So I can put my money in a vault in a smart contract. So even if you hack to my account and you get my private key, you cannot touch my money. And in this case, again, the guardians will come to help me. So your only chance is to hack all my guardians or the majority of my guardians, as you can imagine. This is much, much harder. So solving those kind of security issue that, all you need to do is remember a password and it's okay if you forgot it. Those kind of things that we focus on. And the integration with chatbot is also very important because everyone using chat clients today. I mean, we discover that it's more useful than talking to people. By the way, great example for the double coincidence of one. A phone call is a double coincidence of one. Writing messages solve the double coincidence of one in mobile phones, right?
Yeah.
I mean, it's connected to what we said about writing the technology, but you get the point. So everyone using that, it's great, it's comfortable. My mom is like, spending so much time on WhatsApp. So we wanted to be where the user feel comfortable. And we think that this conversational user interface is kind of the easiest, simplest way to accomplish a lot of things and not to see like complicated forms on your desktop, but just having a step-by-step, and maybe if you don't understand something, you can ask them more about this, and it takes the user through that. And even more importantly is the notifications. So, you want to notify you that someone sent him money or requested money, or there's a new post in the group. So those notifications will get right to the chat client, or the messenger or Telegram or WeChat. We support all of them. It will get right to the user, to the familiar environment, and he can act from there. Because if you get like a notification in Facebook or Telegram, you can choose what to do with that, because you have some buttons there that you can react directly. So it's really all about making it a very, very simple user experience to leverage this amazing tool of liquid user-generated currency on top of the Ethereum blockchain. That's what we are all about.
That's awesome. I mean, one of the main questions I had, if this is supposed to be super simple, which it sounds like it is, one of the main things that's not so simple, that's still sort of undecided in this space, is the regulatory aspect of it all. And of course, regulation differs from country to country, but with the United States specifically, with securities laws and currency laws and things like that, do you anticipate, let's say that Soccer Mom Group does create their own currency through Bancor, do you anticipate any kind of regulatory scrutiny in the future where that Soccer Mom Group may actually be liable for violating securities laws in some way by issuing their own token?
So, we talk about it theoretically, but in fact it already happened. We were asking all those questions about Bitcoin. Is it legal? Is it illegal? It can be used for money laundering. And it was, if you remember, kind of illegal in Russia for a while.
Right. I still think, though, that the problem of securities has not yet been solved, particularly in the United States.
I totally agree with you. I'm getting to somewhere else, which is to say that, we might have some countries with leaders that are, how should I say, less than bright, that might block this kind of new economic development in their own territories. Those countries will suffer greatly because they will be left behind. Luckily, I'm sure that many other countries that would not be, so stupid to block the technology, like blocking the internet or blocking blockchain, many countries that will not act to block new technology will show the world what are amazing advantages those new technology hold. Like, I just imagine that some of the world's country would block the internet. How would the world look to that? I mean, we have probably countries that
just look at North Korea.
Yeah. And imagine that it's not North Korea, because people can still travel, and then you go to this country and you see how they work with blockchain and crowd funds and Ethereum, and how everything is like efficient as hell versus their Stone Age country. So I want to be in that. I want to see Western country banning it, and I want to get popcorn and see what happens, because obviously they're not going to ban it all at once. And even today, companies can register whenever they want. So in Switzerland, it's a very hospitable environment for this kind of things. In Singapore, so companies register in Delaware or wherever they want. So if you want to issue token, you can always do it by setting up a legal entity in a jurisdiction where it's legal.
Sure, but the some laws, like, not to get too in depth on this, but some of the securities laws, like the United States, do reach internationally, where even if you set up an entity in Sweden, for example, and if you issue those tokens or allow people to use those tokens in the U.S., you're still susceptible to those securities laws.
This is why we cannot accept funds from U.S. citizens.
Oh, okay.
It's, we have, whenever you want to deposit, we have a disclaimer, and you have to kind of check a box, confirm that you're not a U.S. citizen, because of this uncertainty. And I don't think that's a great thing from the United States to scare people of the technology in such a way, especially when on parallel Putin is meeting Vitalik and saying that they're going to gain a huge advantage by being the first to kind of use the smart contract and adopt the blockchain. Remove notary. That's what he actually said. That
wow.
You're going to remove notary because you don't need that anymore. I mean, so if that's the path United States will take, I mean, that will be unfortunate. However, I have a feeling that, the people were scared so much that Bitcoin will become outlawed in so many places, and it didn't happen. So I have to assume that the same will happen, but we'll see. It's hard to predict.
Yeah. Yeah, I mean, it's good to know, and I think that's a good place to kind of pivot, knowing, first of all, that U.S. investors are not allowed into this ICO. But I think it's a good time to then kind of pivot out and talk about the ICO specifics. So obviously, kind of on the heels of the basic attention token ICO, which a lot of people probably saw headlines about, it raised more than $30 million, I believe $34 million in less than a minute. And some people were saying 30 seconds, some people saying 45 seconds. And there was a lot of criticism coming to the basic attention token team saying, oh, I tried to get in and only the whales got in, and people that paid huge exorbitant fees got into this token sale. So it looks like you may have sort of adjusted your token sale with that in mind. And what I'm referring to is that your token sale has a minimum 1 hour duration. And that's something that I don't think we've seen before yet in the token sale space. So the question I really had with that about the 1 hour minimum is, let's say you get as much traffic or half as much traffic or whatever it may be as the basic attention token ICO. What happens if you, say, get $500 million or even potentially $1 billion of contributions within that 1 hour? So will the price of the token just go up dramatically, or could you explain that?
So first of all, no, we have a single price for everyone that joined the first hour, because, I mean, this is something that we think is represent our values. I mean, we are coming and we're building something here, and we're telling the world, hey, fund us, right? Fund this protocol. And people are listening and researching, and a lot of people are into that, and they understand why it's so important to give funding to more and more teams that will build technology on blockchain, and we don't want to be in a position that we kind of tell some of the people, hey, you can get in, but you cannot get in. You'll get in this price, but you get, because how to kind of trick the transactions to slip into Ethereum a transaction, and the other guy would not, or the guy who paid $4,000 gas versus the one who didn't. So it's critical to us that we will enable, and this is why it's the first hour, because the first hour is the people that planned to participate. They research, they learn, they know about it. It's not someone who come, oh, I heard this project raised $10 million, the ICO is still running, let's put our own money. I mean, we're not interested in that. We're interested in this really core user base or holders base that figure it out, that believe in what we do, that understand what we do and want to get in. So it's very important for us to get all that. Now, we do have a security cap, which is 1 million Ether. It's the same one that Aragon has and others, but it's like, as much as we would like everyone to participate, I mean, don't go crazy on us. I mean, we're not feeling comfortable with holding this kind of level of money. And yesterday we made an announcement, because people were like complaining that maybe we'll get too much money and that the price will drop right after the fundraiser. So what we did is we came up with an announcement. It's on our blog. You can read it. That every amount above the hidden cap. So we have a hidden cap, which is kind of what we think we need for next few years in order to kind of build Bancor. But any amount above that will go into a smart contract that would offer to buy back Bancor token BNT for the sale price, which is 0.01 Ether.
Okay, interesting.
For 2 years.
Wow.
So for 2 years, you'll have all this money that was that was received above the hidden cap, deposit in a very simple and safe contract, because it does almost nothing. Will be deposited in a very simple and safe contract that would guarantee a floor It's like a huge buy order at the sell price. So if it happens to be that we are about to go below the sell price, so people will start essentially taking that money back, if you
Right,
will.
that makes sense. So what happens? What happens after the 2-year period? Because presumably, let's say only a few people or maybe nobody ends up sort of selling their tokens back to this contract. What happens at the end of the 2 years?
It's actually not about kind of the few people or not, because if the price of the token, of the Bancor network token, will go below the initial price, then no one will sell in the markets or using the smart token that works the same way. But they're all going to use that guarantee. So it's really a question of.
No, I understand. Yeah. Basically, what I'm saying is, just hypothetically, let's say nobody, I don't think you expect for everyone that contributed above your hard cap to suddenly want to sell their tokens back to the contract. So presumably there will be leftover money in that contract after the 2-year period. So what happens to the money then after that 2-year period? Do you guys get it? Do you distribute it somewhere?
No. So after the 2-year period, it is considered to the foundation will get it as like a next stage budget, if you will.
Okay, and that's the B Protocol Foundation, correct?
Yes, the B Protocol Foundation will get it according to the split that we detailed in the token generation event blog post. So it will go to marketing and to build token changer, and there's like how we going to use it, and it's almost like a secondary round where there's no dilution, no one has to pay because the money's already there.
Yeah,
it just gets released. So if and by the way, if the token, if Bancor network token from the day of the fundraiser until 2 years is overperforming Ethereum, then none of this fund will be touched. So we're trying to balance between the fact that we do want to let anyone that want to get in to do that on one hand, and to get in the level they wanted, because some people would say, oh, just cut back the investment. So if someone want to put $100,000, let him send him back 70, right? But usually people, they really wanted to kind of get in with the numbers that they feel comfortable. So we want to balance the ability for everyone to kind of participate and contribute, provide them with some guaranteed security in case it was kind of a much bigger than anticipated fundraiser. And on the other hand, support the foundation for the long term in case everything goes well and by the plan, and we continue to build it. So balancing all those parameters, and actually this solution was received with great enthusiasm in the community. It's like they just want to make sure that we don't get it.
Right. That's what it seems. I mean, it would be a tremendous amount of money, even having sort of this security cap of 1 million Ether. I mean, 1 million Ether right now is, what's that, $260 million? So, I mean, that's perhaps 10 times as much as some of these incredibly popular ICOs. So I totally see the concerns of the community of, wait a minute, that's a lot of money. We shouldn't let somebody just have $250 million because they want to keep the ICO open for an hour. So exactly. I totally understand the concerns. Exactly. But I think the last thing that I wanted to touch on before we wrap up is just the inflation rate of the BNT token. So, some tokens that come out, some currencies have a totally fixed cap, like the BAT ICO. It's limited to 1.5 billion tokens. Could you talk a little bit about the Bancor network token, the BNT, and what the inflation rate is? Is it capped? Is it totally uncapped?
So BNT is a smart token. It's a smart token that holds a single reserve in Ether. Now, a smart token by its nature is not capped because you can always buy it from the smart token itself. And whenever you buy it, new tokens are issued to you. When you buy it, and you buy it with Ether, so you send BNT Ether to its reserve, so now it has more Ether in the reserve, new tokens are issued to you, and the price of per token goes up when you do that. And when you liquidate it, you send the tokens back to the contract. They are destroyed, removed from circulation. You get ether from the reserve, and following that, according to the calculation, the price of every unit goes down. So this is how a smart token works. So a smart token does not have a fixed supply. It has a variable supply that is determined automatically according to its own success. If many people want to buy it, the supply would grow and grow and grow. But that's a good news, because every time that happens, the price per unit goes up.
Yeah.
So that's regarding the supply.
That's interesting. Yeah, it's almost as if the Bancor network token in itself is kind of a proof of concept of the entire Bancor protocol.
Exactly. That's the first smart token.
Yeah, that's very cool.
Smart token.
Yeah, I think that.
Yeah.
Yeah, I think that's a great place to stop. If you have any other closing words, or if you want to let people know where they can check out Bancor and when you all are launching.
So, Bancor.network is our website. The fundraiser is, of course, on Monday, 10 a.m. GMT. And
that's June 12th, correct?
June 12th, yes.
Awesome.
And we are working very hard, and we want to, we do it because we believe it really can change the world for the better. And, specifically, I would encourage people to watch the talks by Bernard Liatar. He's the co-architect of the Euro, who is referring to Bancor as a paradigm shifter in currency.
Wow.
In currency exchange. And he was giving talks about it, and it's on our website, and we're working closely with him. So we have some kind of academic validation that this is real, and we want to use that. He defined it as something that can help eradicate poverty, and if we can do anything to help in that would be our greatest honor.
That's great. Awesome. Thank you so much for your time, Eyal. I sincerely appreciate it, and I wish you luck with the token sale.
Thank you.
Thank you so much to everyone who listened to this podcast. I hope you enjoyed it. If you'd like to request someone to be on the podcast in the future, we're trying to cover all ICOs. So that includes the past ICOs, present ICOs that are currently active, as well as, like you saw today, ICOs that are happening in the future. Head on over to ICOalert.com/podcast, where you can submit your choice for who you want to see on the podcast next. Thank you all so much for listening. If you haven't already, please do subscribe and check out ICOalert.com for our in-depth analysis of upcoming ICOs, as well as our comprehensive list of every initial coin offering. I'm your host, Robert Finch, and I'll be back next week with a brand new episode.